What's up, weirdos? How's it going, guys? All right, nice little evening here, eh? Nice little evening. Bitcoin trying to bounce back a little bit. Not too bad, not too good. All right, I'll take it. I will take it. Let's have a look at what we got. We seem to be holding this support level now for 1, 2, 3, 4. This is 5 days now. If we close above here again. Very, very interesting. Very, very interesting. So the problem is we clearly have a buy wall down here. Now, the longer we stay right here riding this support level, the more likely this support level is going to collapse and we're going to come down, right? Because what we're doing here is we're chipping away at the buy wall. We need to make a move to the upside soon or else we're going down. Now, I think we're going down personally. I think we're going to come down and we're going to test 114K, right? That's what I think is going to happen, because we're just straddling this, like crazy here. So, yeah. How the hell are you guys anyways? What's going on out there? Let's have a look across the chat here. There she is, Gamma Goddess, with the first and only super chat of the stream. Thank you, Rob, for all you do. Let's get this money. Can I get an amen to that? Absolutely. All right, let's dive into the chat a little bit. Kind of quiet this evening, eh? Kind of quiet this evening. How is everybody? Quentin, what's up, buddy? Good to see you, man. Pete Ward, Rob, my dude. Let's get that money. Twisted says, D's nuts. Beebs, my guy. What's happening, man? Marvin, what's up, buddy? Good to see you, brother. Good to see you, man. What do we got? 128 people watching, guys. We have 39 likes. Let's get those likes up, guys. Let's get them up. Let's get them popping. Let's go. Jack stacked and fanny packed. Beast mode. What's happening, brother? Hey, Rob, where do you see the total 3 dropping this cycle? And do you think the breakout starts with rate cuts? Thanks, brother. No, not necessarily. I think that when we talk about the total 3, let's have a look at it. Let's have a look at the total 3. When we talk about the total 3, it already tried to break out here, as you can see. We broke just a hair above the spike we had back in December, right? Now, again, let's zoom out a little bit here. What do we have? So here we have the previous cycle high back in 2021, which we are currently above right now. We broke above. We rejected off the new high that was set in December for the total 3, right? Now, are we going to retest the previous cycle high before going up? That's entirely possible. So that's what I think is kind of going to happen here, right? I think the Bitcoin dominance is going to surge, and the total 3 and the total 2 are going to go down a little bit temporarily, because Bitcoin needs to make its next leg up. I think that for the next leg up for Bitcoin, I think we're looking at somewhere around about $135,000, right? Which is a big jump. So, but Bitcoin needs the dominance in order to do that, right? So we're going to see the total 3, the total 2 kind of take a step back here in the near term, so that Bitcoin dominance can go on a run. As for knowing where it's going to go in the bottom of the next bear market, I honestly, man, could not tell you, because there's so many new projects being created all the time. It's hard to really kind of grasp, because they all affect the total market cap of the asset class, right? So as you can see on dominance, I'm expecting it to come all the way up here, right? Back up to 60% in the near term, which we did make a pretty big leg up back above resistance. So, yeah. DH, so many mixed signals. Which way do we go? Which way do we go? Yeah, a very, very confusing week ahead, guys. Very confusing. Absolutely agree with that. That's why this week you're going to need to be paying attention to everything that's going on. There's a lot happening. There's a lot of uncertainty in the market right now, right? So nobody knows which way the market's going to go after the rate cut. Are we going to have a sell the news event, or are we going to pump because Powell implies a rate cut in October? Anyone who says they know, they're full of it, right? They're full of it. Isaac, what's up, my dude? First Pokemon of the day. We got Lickitung in the house. Gamma says, hope everyone's doing well. Harlem, Quant, absolutely. Quant is a steal. SJ, what's going on? I've been adding to my honey bag the last few days, trying to get 100K. Nice, nice. Good to have a goal. Good to have a goal. Easy, yo, yo, yo. Let's make some money. OTW down. Let's go. Cav, what's up, man? Rob, thanks for all you do, man. Hey, fist bump, brother. Fist bump. Sherry, would you pause copy trading before the FOMC? My copy trader right now is not doing anything. It's just sitting on the sidelines. I'll make a little bit of a video for you guys this evening talking about that, okay? Over on the trading group. So keep an eye out for that tonight. I'll drop a video giving you my insights on that tonight. Hey, Brother Rob, thanks for all you do. Hey, no problem, man. Candyman in the house. Today, I had someone knock on my door asking for small donations towards the local swimming pool. I gave him a glass of water. Smart ass. I like it. I like it. Big Mike, always got my back. Thank you so much, man. Thank you so much. I appreciate you, man. Thank you, thank you. Attila the Hun, dropping that cheddar. 7 herbs and spices. Elbow drop on Big Rob. Thanks for everything. Just joined your trading group. Best thing online. Can't wait for your guidance. Hey, absolutely. Thank you so much for joining our trading group. Thanks for being a part of the family. You're going to find that it's not just me. We have some good leaders in there who are really, really taking it and taking the ball and running with it. We really do. We have some great leaders in there that know what they're doing. All the new people to trading are learning how to do everything. It's fantastic, man. It's fantastic. Thank you so much. Absolutely. What else we got? Ramona dropping in. I love your dad jokes, Candyman. Hit the likes, everyone, too. I told you, Candyman. Everyone's talking about your dad jokes. Every stream, brother. Every stream. That's awesome. That's awesome. Rosh, Swift and Jasmine, XCN definitely will go high. Oh, hell yeah, they will. Hell yeah, they will. Where are we? Where are we? Silver Sailor, what's up, man? Hey, Rob, any thoughts on BRN? Bought 5K at 6 cents 8, not behaving like AVNT, unfortunately. BRN. Oh, yeah. But I'll give you my thoughts on that over on the Patreon, okay? We don't like to talk about our Patreon gems over on YouTube. So, Dave, what's up, man? Good to see you, brother, man. Rise above, what's happening? God bless you. Joining your swing trade tier. Yes. Join. You're going to absolutely love it up there. You got your own, we got our own chat. The trading group has their own chat, their own videos, everything, exclusive stuff. So, rise above, what's happening? Matt, what's up, buddy? Good to see you, Matt. Oh, house. Colonel Sanders once said, no likes equals no bull run. Let's go. D-Money. Let's go, Lions. There you go. Jovan. I love you, Rob 100. I love you too, brother. I love you too, man. Jared, got to stop by and say, what's up to my favorite crew? Looking forward to seeing what I can make happen in the swing tier. There you go, man. There you go. Diago, what's up, man? XCN. Absolutely. Beebs. I believe unemployment applications drop Thursday as well. Options expire on Friday as well. Fed, Trump, and a lot of volatility this week. Strap in, strap on, guys. We are headed in God knows which direction, right? Sorry, I thought it was Patreon only. Yikes. Hey, no worries, man. All right. Well, all right. We're caught up in the chat just like that. Boom. Let's get into the news. Let's see what's going on around the space. What do we have? 162 people watching. We have 62 likes. Let's get to 100 likes, guys. Let's get to 100 likes. We got 62. We're getting there. We're getting there. All right. Let's see what's going on up there in the crypto space. First, quick shout out, guys. Channel sponsor, Decent Biometric Wallet. You can swap, take profits, and even stake your crypto right on your Decent wallet. Use our link down below. Get a 2-for-1 deal on the Biometric Wallet today. They are selling out like hotcakes, guys. I got to be honest. I've been getting all kinds of notifications that everyone's scooping up the 2-for-1 deal while it lasts, guys. So check it out. Jeffrey, what's up, buddy? I know what's going to happen. We going to make some money. There you go. Jed said, hit the like button. There you go. Ray, let's get it. Hit the likes. Absolutely, man. All right, let's get this little, we got this little clip here from Pompliano. Pompliano talking about the Fed rate cuts. The Fed's going to cut rates this week. Stocks, Bitcoin, and gold prices are going to fly higher.
All right, ladies and gentlemen, things are about to get very crazy across financial markets. Now, I know there are plenty of people that are still predicting a recession is right around the corner, but they're simply wrong. I don't know what these people are talking about. I'm not sure if they're looking at bad data, they're drawing bad conclusions from good data, or there's some combination of the two. But it doesn't really matter how they're arriving at the wrong conclusion. They're just flat out wrong. Take the US stock market as one data point.
Yeah, dude,
Adam Kubisi writes that the stock market is incredibly hot. I don't disagree with him. Since 1975, there have only been 6 times where the S&P 500 rose 30% or more in 5 months. 2025 is one of those times. In 100% of these cases, the S&P 500 has ended higher in the following 6 and 12 months per Carson Research. In fact, during such occurrences, the S&P 500 has rallied by an average of 18% in the following 12 months. That's pretty good. Those are insane numbers. So you want to bet against history? Be my guest. I like to think of financial markets similar to science, though. Things in motion tend to stay in motion, and momentum is one powerful force. But this is where things get interesting. If the stock market is growing by 30% in 5 months, there's got to be someone who's getting richer, right? Who the heck is holding all this stock? Well, Adam goes on to explain that newly released data shows that U.S. household net worth jumped by $7 trillion in Q2 of this year alone. In other words, for 3 straight months, U.S. households added an average of $79 billion in net worth every day. As a result, the rich are getting much richer. Now, currently, the bottom 50% of U.S. households, they hold just 2.5% of total U.S. wealth. In fact, the top 1% now holds $40 trillion more wealth than the bottom 50% combined. So let's just recap this situation for a second. The stock market just drove historic returns over the last 5 months. It made rich people even richer, while the bottom 50% of Americans were left sitting on the sidelines. Now, that isn't the rich people's fault. It's a financial education problem. Stop blaming the rich people. In fact, I would argue that we have a national crisis in this country until we figure out how the heck do we educate every student on personal finance and investing.
Yes.
Educate them and they can get rich too. Asset owners are going to be winners and savers will be losers moving forward. You may not like it, but it doesn't make it untrue. This bull market is not even close to over either. Mike Zaccardi writes that the average bull market lasts 70 months, 70. We're only about to complete month 35 of this one. Well, that's a narrative violation, right? And I know your pessimist neighbor, they ain't going to tell you that data, but data is data. And almost all of it points to the fact that we are in a bull market that has plenty of legs left. This brings us to the Federal Reserve meeting this week, and that should culminate in an interest rate cut. Yes, they are going to cut rates with the stock market at all-time highs and the government inflation data measuring above 2.9%. We have never seen this situation before. Creative Planning's Charlie Blello points out that the last time the Fed cut interest rates with inflation over 2.9%, well, that was back in October of 2008, and it was in the midst of the worst recession and bear market since the Great Depression. Now, I personally have 2 big conclusions from this unprecedented move. First, the Fed is going to do this because of the labor market. Artificial intelligence has been a massive deflationary force in the U.S. economy. Companies are figuring out how to be more productive and more profitable, but to do it with fewer employees. It's good for business. But second, the Federal Reserve has been behind the curve for months. I don't know what these people are doing. I believe the Fed should make a 50 to 75 basis point cut in interest rates, and that would allow them to catch up to where they should be. But history tells us that the Fed is going to avoid being bold in their decision. But don't take my word for it. Jordy Visser explained to me this weekend why he sees the odds of a 50 basis point cut increasing. Take a listen.
For me, this was the dividing line where I think this week between Oracle happening and the CPI being out of the way now, so the Fed's going to cut rates, I think all of the bearish sentiment that's been sitting out there where people refuse to stop with the tariffs, because that's what the CPI is. I'm worried that tariffs are still going to show up somewhere. I think this was the official ending of tariffs this week.
All right. So you say it's the official ending of tariff, like fear mongering. I saw a lot of people saying, oh, inflation is now 2.9% year over year. The tariffs are here. They're infiltrating into the inflation numbers. Look at, and they would go and they would find some data point. They'd be like, I told you the tariffs are inflationary. Look at this thing here. And by the way, these aren't like trolls on the internet. These are like well-respected economists and actually people that like we talk to on a weekly or every other week basis. I'm shocked at how many people are like, hey, inflation is here. Inflation is being driven by the tariffs, and we should all be concerned.
So here's the beauty of those economists. Their job, if they're at Goldman Sachs, Morgan Stanley, is to try and help investors make money. None of that is going to help investors make money. If anything, it's helping them lose money or underachieving. It is the reason why I spend all of the time that I do on AI. It's the reason that you and I basically got together because I believe AI is the gateway to crypto. Economists don't know anything about AI or crypto. Nothing. So what happened in Oracle, I mean, just to put this in economist terms, which no one put out this week, Oracle had an increase in orders of $317 billion. Okay.
Is that a lot?
That's a lot. To put it into context of economist terms, nominal GDP in the US is, let's say, 4.5%. At 4.5% on a $30 trillion economy, you're talking about, let's say, $325 billion a quarter increase. So Oracle in 3 months, their back orders grew by $300 billion. So what's more important right now than what's happening with artificial intelligence? And that's just the infrastructure side. That doesn't include the profit margin side. It doesn't include the adoption side. It doesn't include any of the other things that are going on. This is literally one of the largest companies in the world saying, we don't have enough capacity for the orders that are hitting us. Economists don't talk about that. They're still fixated on whether core goods services moved up. And I'm not kidding you. It gets rounded to where the big, let's say, scary part today was, well, it came out at 0.346. If it had come in at 0.351, we would have rounded it up to 0.4. That's the stupidity that gets in for people thinking that is going to help you make money or not.
I think Jordy's got a point there. But let's just level set for a second. Polymarket odds are only 8% for a 50 basis point cut. That's very low compared to the 90% odds for a 25 basis point cut this week. But it's not ultimately going to matter. It doesn't matter whether they do 25, 50, or 75 basis points cut. Carson Group's Ryan Dietrich writes, the Fed's last cut was in December of 2024. That's 9 months between cuts. Waiting 5 to 12 months between cuts tends to be bullish for the S&P 500. Higher a year later, 10 out of 11 times with above average returns, and that should have the bulls smiling. The Fed is going to push asset prices from stocks to gold to Bitcoin to much higher levels. They can't help themselves. They have to address the labor market issues, or they are going to have a much bigger problem on their hands. Put aside the fact that the government's data misled the Fed into believing inflation was much higher than they thought it actually was. Ignore the fact that the Fed has become a politicized organization that seems to be cheering against the current administration's economic plans. And you know what? You should also refrain from getting worked up about the Fed's flip-flopping about being data dependent. The Central Bank of the United States is now backed into a corner. They have to cut interest rates. Given asset prices are near all-time highs, we can only expect the newfound cheap capital coming into the market to push prices higher and higher in the coming weeks and months. So ladies and gentlemen, get your rain boots on. Liquidity is coming, and I think investors are going to be very happy.
We're just getting started, guys. What do we got here? ZBET commercial is very bullish. Yes. What are your thoughts on Swell? Good tokenomics, high risk, high reward, low market cap. That's what I would say. But I'm not big on restaking governance tokens, though. So Cody says, smash those likes, fam. Yes. Beebs, a good interview. I was able to watch this. Yes. Already a little late, but I'm here. 50 push-ups, Ari. You know the rules. You know the rules. And not girl push-ups either. Those real ones, right? Keep your knees off the floor. Men's push-ups. Let's go. All right. What else do we have? Candyman, FYI, sometimes I tell uncle jokes like weird uncle that still lives with your grandparents' base. Nice. All right. Strategy adds 60 million in Bitcoin as holdings near 639 million Bitcoin. Can you imagine holding that many Bitcoin? Strategy's latest SEC filing reveals a $60.2 million purchase of 525 Bitcoin, adding to a colossal hoard that now stands just shy of 639,000 Bitcoin. And cementing its unparalleled position in the market as the largest corporate holder of the original crypto. According to a Form 8K filed with the SEC on Monday, the Tyson's Corner, Virginia-based company, acquired the Bitcoin between September 8th and 14th, paying an average price of $114,562 per Bitcoin. WF Capital, what's up, man? Blessings, John. Super fantastic. Good to see you, man. Good to see you. Strategy said the purchase was not funded by operational earnings, but rather by the execution of its capital market strategy, specifically utilizing net proceeds from the sale of 3 distinct classes of perpetual preferred stock. John, good to see you, buddy. Per the filing, the 3 classes of shares strategy sold, we don't really care about that. The important thing is that MicroStrategy has purchased more Bitcoin. Now, there's a point to me going over this, and I'm going to segue over to the next article because, again, they're kind of coupled together with the point that I want to make, okay? Bitmine surpasses $10 billion in Ethereum holdings. Tom Lee's Bitmine has reached a significant financial milestone. The company's holdings have now surpassed $10 billion, with Ethereum being a central component of this new valuation. The company currently holds 2.151 million Ethereum, which is valued at approximately $9.96 billion. This development positions Bitmine as a key player in the cryptocurrency market. Other notable investors in this venture include Founders Fund, Stan Druckenmiller, Galaxy Digital, ARK Funds, managed by Kathy Woods, and Bill Miller. According to multiple sources, Bitmine's strategy focuses heavily on Ethereum accumulation and leveraging Ethereum's proof-of-stake model to generate revenue. Ethereum is the focal asset for Bitmine's digital treasury. The substantial accumulation has been part of Tom Lee's vision to establish Bitmine as a dominant force in digital asset reserves. The company is not only focused on Ethereum, it also holds smaller positions in Bitcoin and strategic shares in 8 co-holdings. Though specific on-chain data, such as total value locked, changes, or staking flows related to this accumulation are not available, industry watchers note that Bitmine strategy is unique. The company's approach to leveraging Ethereum's proof-of-stake system could influence dynamics in in the staking domain. Observers often compare Bitmine's aggressive strategy with that of MicroStrategy, Bitcoin's accumulation tactics. However, Bitmine's focus remains distinctly on Ethereum. Its utilization of Emerson technologies to enhance cryptocurrency mining efficiency sets it apart from its counterparts. Corporate tactics such as these have garnered significant attention and backing from institutions like BlackRock and Vanguard. Despite the lack of direct regulatory statements from primary sources, institutional support indicates growing acceptance of digital assets in corporate treasuries. The supportive role of heavyweight investors and institutional backers like BlackRock and Vanguard is significant. These entities provide the backbone of credibility amidst increasing regulatory scrutiny. Recent developments, such as updated SEC filings, highlight the focus on transparency in crypto asset holdings. While the SEC's perspectives on cryptocurrency holdings evolve, Bitmine remains cautious yet strategic in its accumulation efforts. As cryptocurrencies remain a volatile sector, careful negotiations through the compliance are likely priorities for Bitmine and smaller firms. So, why am I going over these 2 pieces of information? You've got strategy, purchasing more Bitcoin. You've got Bitmine accumulating another big bag of Ethereum. And you have average, everyday retail investors sitting there right now going, is buying crypto a good idea? Should I be buying crypto? Is it a scam? Think about this logically. You have these companies en masse accumulating crypto, tens of billions of dollars. and you're sitting there wondering if you should put a couple of G bars into it, right? I always put my pennies where they put their dollars, right? I don't listen to what they say. I put my pennies where they put their dollars, and it's worked out pretty good, right? So that is the point, right? If you're sitting there wondering if it's a good idea, guys, come on, right? Come on. Let's segue over to Silver Sailor says that's over 73 billion. Zebek, nice. Squawk Box, a 25 basis point cut is a better choice than 50 this week. So 25 would be better than 50.
Markets are gearing up for a critical Fed meeting this week, and joining us right now to talk about it is Roger Ferguson. He's former Fed vice chairman, also a CNBC contributor. And Roger, good morning. Let's talk first of all, are you in the 25 basis points camp or the 50 basis points camp? Because I think everybody's pretty convinced the Fed will cut this week.
I think the data has come in, reinforcing the notion of labor market weakness, but we're also seeing some spillover into higher prices, which I think suggests 25 is a better choice than 50.
So 25, you think, rather than 50, but you do anticipate it'll be a series of 25 basis cuts this year if the data stays the way it is?
Well, look, I think what we're going to hear from Jay Powell at the press conference is that the next series of meetings are, quote, live. But I think you used a word that's going to be really important, which is the data. I think we're going to hear again, this is a data-dependent Fed. We want to be cautious. So I don't think he's going to close the door on the possibility of more cuts this year, but I'm not sure that he's necessarily going to signal that it's a definite thing. I think he's going to more likely say, every meeting is an independent decision and the data will decide.
Hey, Roger, if they're really data dependent, you would think potentially that a 50 basis point cut might be more likely because the jobs number has been pretty weak. The inflation data has been pretty tame. I think it's the expectation that the inflation data could get worse that keeps them at bay. But if you're really just following the data at this point, it might push them more towards that 50 basis points.
Yeah, I might disagree with you slightly in that while the data's come in on inflation as expected, remember the last set of data showed a headline number of 2.9% core inflation running somewhere like a 3% annual. So I'm not sure I describe it as tame for an organization that says they want to see definitive evidence that that the inflation is moving to their 2% target. I think that's where there's a slight disconnect. While it's been as expected, I'm not sure I'd use the word tame.
Okay, that's a fair point. Let's talk about kind of the circus of headlines outside of just the Fed's main mission. That would include Stephen Myron coming in. What's happening with that? Lisa Cook. How do you perceive all of this? And does it change anything that happens at the FOMC meeting over the next few weeks or a few days?
I don't think it fundamentally changes the FOMC meeting over the next few days. Unfortunately, you used the word that I hate to hear in association with the Fed, which is circus. But look, I think Stephen Myron coming in and saying he's going to be on leave from his role in the White House certainly calls into question independence in a very direct way. Most senators, I think, at least on the Republican side, didn't seem to be as concerned. But certainly I am as a former Fed official. And there's still ambiguity around the Lisa Cook situation. I doubt that the courts are going to remove her from the ability to vote at this meeting. That would appear very rushed and hurried, given information coming in about what was actually said about this property. Is it a vacation property or primary home? So I'm expecting both Myron and Cook to be governors and voting, and still a little bit of swirl, and in fact, quite a bit of swirl as we try to sort out the Lisa Cook situation.
Hey, Roger, I don't know if you heard us talking about it. There was this new evidence that seemed to emerge over the weekend on the Lisa Cook situation, some documentation where she did seem to indicate this was a vacation home, and yet on the banking form, it was listed obviously as a primary residence. You have any new take on all of this?
I think I'm with you. Very confusing. She's got a very capable lawyer. Why that, disclosure about the some of the documents saying vacation home didn't come out earlier, I can't speculate. It may have taken some time for it to be found, She may have had a vague recollection, and then they had to dig through files to find the documents. But frankly, all of us are speculating at this stage, and this is going to go through the court. There will be revelations, probably more to come, that will, I hope, clarify this. But we should be open to the fact that this is also perhaps an ambiguous situation, and it'll go down to what's the definition of cause, and the courts will have to tell us that. So I think this is very murky, unfortunately, very murky.
Yeah, the cause issue, obviously, right in the day in court and all that thing. FA Director Pulte is watching. He says he just tweeted, "I'm watching Squawk Box. A question: why is Dr. Cook giving her so-called preliminary loan estimates to left-wing journalists instead of into legal filings? It's extremely sketchy and appears almost as deceitful as declaring her Atlanta condo her primary residence." So that, I like when anyone watches, I guess, but it's funny because he says it there and it comes out here, and it's in the first.
I know he tagged you and he tagged Becky. I'm watching Squawk Box. Hey, Bill.
I'm sorry. I'm sorry.
I'm here.
You know what?
Tag me too if you like, but
it might have been at Andrew Sorkin. People forget it's Andrew R. I don't. Right. Isn't it Andrew R. Sorkin?
Yeah. No. I think he thought that I was somehow on the other side of his argument here.
No.
I mean, but I haven't been for the last month. I mean, we got this new piece of evidence, and we got to figure out what it means.
I know. I agree.
Roger, do you think it will be unanimous in terms of every voting member wanting to cut rates, or do you think that there will be holdouts? I mean, I can definitely see that there would be people who would support a 50, people who would support 25. Do you think there'll be anybody who says we shouldn't cut at all?
I think that's really a possibility here. My earlier point about the dual mandate, inflation does not appear to be definitively moving towards 2%. It looks like it's stuck at 2.8, 2.9. I can imagine one or two saying, hold on here. There's also a question about what's causing this weakness in the labor force. Supply and demand considerations coming into play, so-called structural factors. And it may not be wise, some will say it may not be wise to cut into structural labor force changes because you're only going to drive up demand without increasing supply.
You mean if it's an immigration issue where we don't have as many people coming into this country, or we have people leaving this country, and as a result, the expected jobs market has shrunk? There's that, and then there's also the question of how AI plays into this, right?
That's also a big question. Now, AI could be, I hope, as do I think most of you, very productivity enhancing, and it will take some time for all that to sort out. So I think this is going to be a very interesting meeting. First time in a long time there could be dissents on both sides. And I think Powell's going to try to walk it down the middle and keep as much flexibility as possible, knowing that he has a pretty divided, in my expectation, probably somewhat of a divided committee.
Very quickly, what should we be watching besides the obvious, the next jobs number a month from now, you get CPI and PPI, but what else should we be keeping our eye on?
Well, first, let's watch the outcome of this meeting to the point that you raised to see if there actually are dissents on what side. I think this is a meeting where they're going to do the so-called SEP, the dot plots. That will be a chance for all of us to sort out exactly, how fractious this committee is at this moment, based on the data that comes in. And don't forget that once the blackout period is over, we'll be hearing from many of the policymakers, and always listen closely to see where they are as well. And then obviously, as you say, the data. So it's going to be a lot for the market and for all of us to chew on over the next period of time.
Yes, it is. And that's why so many people are so confused about what's about to happen in the near term. How are markets going to be responding? Chris, my dude, I'm too sore for push-ups, so this is my penance for long. You bought your way out of it. I guess I accept. Hey, Rob, is 6.6 million Swift a good bag? Oh, yeah, of course. 100%. Ray says, hit the like button. Beeb says, Zebek, NHL, and NBA ad. Printing money, guys. I have a video coming out later tonight. talking about this whole situation with Zebek and future listings on Binance and stuff like that. My thoughts on all of that, guys, you're not going to want to miss out. It is a Patio Chronicles video, so make sure you guys check that out. Ty, what's up, buddy? 50 push-ups, man. You're late. All right. SEC to notify crypto businesses of technical violations before taking actions. Gary Gensler's screaming into a pillow somewhere right now, or biting it, one of the two. A report by the Financial Times revealed that the SEC plans to issue crypto firms notices of technical violations before taking action. The move is a shift away from the aggressive enforcement approach that was pursued under the former president, Joe Biden. Trump-appointed SEC Chair Paul Atkins told the Financial Times in an interview in Paris that the agency would continue to pursue fraudsters, but that there were other that require notice, right? He criticized what he described as the SEC's past habit of bashing down doors over minor violations, explaining that it would now stop treating technical mistakes like the same harshness. Atkins believes that that regulated businesses should have a chance to correct compliance issues before enforcement action is taken. He described his approach as an effort to fix what many saw as a lack of due process, proper notice, and rule of law in the commission's work. It just makes sense, guys, because the old SEC under Gary Gensler was putting companies out of business, just suing them into oblivion for these minor little technicalities, right? It's absurd. I think Gary Gensler needs to be in prison. That's still my stance on it. He put a lot of people out of work and bankrupted a lot of companies. One of his criticisms is about the billions of dollars in fines handed out for record-keeping violations. He argued that the regulator's actions were not guided by precedent or predictability and said, quote, "That's not how a regulator should have acted." Atkins added that many people were right to bash the SEC in recent years for its methods. The change is part of other efforts made by Republican regulators to reduce enforcement programs launched under Biden and reshape the agency into a more business-friendly body. Since January, the agency has dropped several cases against crypto platforms, including Binance, Coinbase, and Ripple, among others. The official also talked about his plans for digital asset regulations, explaining that he wants to fulfill Trump's promise to make the United States the crypto capital of the world. Former chair Gary Gensler, his tenure was marked by fines and lawsuits against banks, brokers, and crypto firms. He also maintained the view that most digital assets qualified as securities and resisted calls to establish crypto-specific rules. On the other hand, Atkins believes that most tokens are not securities and supports legislation that would let investors trade tokenized shares and bonds using blockchain technology. He cited the 2022 collapse of FTX as an example of why domestic oversight is important. Many investors in the Bahama-based exchange lost money, but customers of its regulated U.S. derivatives arm were reimbursed because it operated under official safeguards. The 32-year-old said the financial watchdog has intentions of making rules for smart contracts and tokenized securities, and warned companies already offering trading in such U.S. stocks to move carefully while the commission works on these standards. You know what? It feels weird, guys. If you were here for the last, I don't know, even just 3.5 to 4 years, maybe you feel the same way I do. Does it not feel weird that we're no longer under the terrorism of Gary Gensler and his SEC? Does that not feel weird to you? It feels weird to me. Like, it felt like it lasted forever and it's finally done. It doesn't feel like it's done, but it is. It's weird. I don't know. Amazing Coins at work. Had to get in a quick hello, Rob. And Crypto Weirdos, we appreciate you, Amazing Coins. Thank you so much, brother. Thanks for popping in. Okay, what else do we have? We have this last clip here. Let's get into it. From Squawk Box. It's very gratifying to see President Trump's challenging the Fed, says Judy Sheldon.
It's going to kick off its two-day policy meeting tomorrow. Joining us now, former Federal Reserve Board nominee Judy Shelton. She's a senior fellow at the Independent Institute and a former economic advisor to President Trump in his first term. It's good to see you, Judy. It's been a while. I'm reading one of your op-eds from right when the election happened, and you said, now that Donald Trump is the president-elect, expect warnings about the dangers of compromising the independence of the Federal Reserve. That was prescient. I'm trying to determine whether you knew that there would be finger pointing immediately from people that are on the other side of the president on a lot of issues, or whether you knew that the president would try to change the Fed, which I think you probably think there are fundamental changes that are in order.
I knew the finger pointing would result, but I think it's very gratifying that President Trump is challenging the Fed. I think it's a healthy move and long overdue. I've been saying on your program for quite a while that the Fed has gotten too powerful, it's too prominent in financial markets, and it's way too political.
But the president, I guess people that would take the other side would say he's just interested as a real estate guy and as president. And we know that all presidents like lower interest rates. They think it's going to help their economic record and the stock market and everything else. The president hasn't voiced the same concerns that you voice about problems with the Fed. He just wants lower interest rates.
Well, I don't think that's necessarily true. I think that he, like myself, probably thinks that it's ludicrous for the Federal Reserve to be deliberately imposing restrictive interest rates, which just prevents access to capital for the private sector at a moment of great transformation of our economy. But that transformation is in favor of Main Street and small and medium-sized business. And when you have a fiscal stimulus program caused by deficit spending, and then the Fed tries to counter that by imposing restrictive interest rates, all you're doing is empowering government, because government will always pay whatever rate they have to at a treasury auction. But at the same time, you are putting up a real obstacle to access to capital for the private sector borrowers. And so you're inhibiting the entrepreneurial energy that is needed for this transformation to go from the increasing financialization of America's economy to something more solid, based on real economic growth, the kind that actually raises living standards, that offers more opportunity to be a successful entrepreneur, and results in greater shared prosperity. And that's what you would want in terms of monetary policy that's more oriented to the overall economic agenda, which is in favor of harnessing that energy toward a more productive economy.
We had a bank CEO of one of the big banks on last week, and I asked about that question. He said, well, we're being expected to hold a lot of capital and not lend it out. And it's not really a major part of the balance sheet that they get paid on funds that they have to hold.
Charlie Sharp said they'd rather loan the money out because then they can build more relationships with the clients, and that it's in a much more profitable relationship doing it that way.
I watched that interview, very interesting, because you notice what he said is, of course, we want to maximize our lending. But then he said, for various reasons, we have to keep not just what we call ample reserves, but abundant reserves, which means too high, these cash balances. And it is a considerable part of the net interest income of banks, which goes to their bottom line. It is a major part of their profitability, which is why I think you would see banks resist if the Fed were to end this mechanism of paying banks on their cash sitting at the Fed doing nothing.
Hey, Judy, can I ask us one question about what might be described as the politicization or the political pressure on the Fed? One of the reasons that that I think about the independence of the Fed is because I think about what happens in a financial crisis. Think about 2008. You can go back to 1929. You can look every time in between. And typically, when the Fed has helped save the day, they've had to do things that are remarkably politically unpopular. You actually have to do almost what's at odds with what might be what would be in the political interest at the time. And so the more pressure you have brought to bear, and even the kinds of people on that committee, if they don't appear independent from those in the political class, the more complicated it gets when you actually do have a mess on your hands. How do you think about that?
Well, Andrew, first, I look forward to your book on 1929. And because you brought up 2008, one of the justifications for a central bank with so much power is to avoid the financial collapse, that very kind of debacle. So where was the Fed in 2008? How come no one there saw it coming?
But
And then,
Judy, a better example is Volcker. Volcker would have never been allowed to do what he had to do if you had where did he take rates? Look at where he took rates. It was almost unheard of. Any president in the right mind would, if they had control over the Fed, would have told Volcker, "What are you doing? You're trying," and he did. You're going to break the back of inflation through a recession, and that no president wants that. That's the example that I think it would be impossible for someone to act independently, which Paul Volcker had to do.
but Paul Volcker was very supportive of the Reagan supply side agenda. He said you have to give people incentives to save, work, and invest. What Paul Volcker said to Congress was, you need to balance the budget. And look at the Nixon years prior to that. You had guns and butter deficit spending. You had the end of Bretton Woods in 71. And so the inflation that we started to incur by the end of the 70s is what Volcker then had to wrestle with. But he really pointed a finger at the fiscal deficit spending. And I think when a central bank does have to impose these restrictive rates to fight runaway inflation, I mean, look what happened in 2008. You had the Occupy Wall Street movement really merge with the Tea Party in saying, all we know is this financial system is rigged against us. We're all losing because the Fed is going to do everything it can. It's going to throw the kitchen sink at a debacle, often of its own making. And the people who suffer are the ones who then incur whatever inflation, whatever disruptions.
Sure, but I think we can agree that the Fed didn't, missed the crisis on the front end, no question. I think empirically, there's nothing else to say about that. The question is then when these situations happen, what you do about them. And I think I would like to think that we agree, but maybe we don't, that actually flooding the system is the right answer, as politically unpopular as that may be.
But you end up rewarding the Fed.
I agree you do, but the flip side is then you get into 1929 situation, frankly, where everyone just sits on their hands because they think it's politically unpopular to do anything else, and then you get yourself into a real depression.
But do you think having zero interest rates for 8 years after 2008 made sense? And remember that paying interest on reserves was meant to be emergency authority.
I think we can agree that perhaps it went on for too long. I'm not suggesting it didn't go on for too long at those lower rates. I'm saying, but in the moment, people have to do things that, as I was describing, are sort of politically unpopular. And if the entire Fed becomes a political animal, it becomes a lot more complicated.
But I think you're conjoining the Fed's role as lender of last resort with its newly acclaimed role as manager of the economy. And it's really an anomaly for a free market economy. I don't think that's the appropriate role of the central bank, to see itself as managing by manipulating the interest rate. Right. Most important price in capitalism is the price of loanable capital. I would much rather have the Fed right now fighting inflation the way Volcker did, by actually engaging with markets, responding to price signals, and allowing free market forces of demand and supply for loanable capital to establish the appropriate interest rate. I trust the innate instincts of the private sector more than 12 people voting on it 8 times a year.
It's 17 years later, and would you say that something came home to roost from what happened there? Because we're doing pretty well. And the worst case scenario is that the whole recovery was built on, on an unstable foundation, and there was no price discovery, and we didn't know really where interest rates should have been. All those things never really resulted in the worst case scenario that a lot of people thought, or did they? We got 38 trillion in debt, obviously, and that could. Is it still? Will things still come home to roost in your view from that? From those mistakes?
Yes, I think that you need a sound monetary foundation, stable money to provide opportunity for people who don't already have financial assets. I think that the Fed's using the value of the dollar more or less as just one more economic variable that they can try to manage to pursue government objectives. But I really think people should be able to count on sound money. So I would say that the Fed's role has been to really exacerbate wealth inequality, income inequality. And I think that really unleashes resentment in a democratic society and feeds this sense of the system's rigged against the guy who just wants to have a connection between effort and reward.
Guess we got to go. Do you think it's okay for Stephen Myron to keep his job with the administration and be on the Fed, even if it's for just 4 months? Or that does seem. Go ahead.
I say just go for it. I think the Democrats have been obstructionists on nominations to serve in the Trump administration across the spectrum. And I heard your interview with Peter Navarro. It's not about retribution, but there's a certain amount of justice. And I do think that you have to be even-handed about this. So I hope he gets put on the board right away.
I do think the Fed has too much power and control over the economy, guys. I really do feel that way. Big C, Big Rob with the crystal ball / time traveler. The squad is waiting patiently. Let's go, brother. Absolutely, man. We're getting there. We're getting there. Light Warrior, I appreciate you, Rob. The Patreon is a great deal and invaluable. Thank you, brother. That's it. I'm grateful and just wanted to share. Smash the like button. Absolutely, man. I appreciate you. Let's get rid of it. Yeah, no kidding. Yeah? No kidding. Yes, speaking of which, guys, listen, again, Trading Group has been crushing it. If you want to learn how to trade properly, guys, get over there. Join me and thousands of other members today, making that cheddar, making that money. I do think we're going to see a correction in Bitcoin, and I think it's an opportunity for a lot of us over in the Trading Group to make a lot of extra Skrilla. So check it out today, guys. We try to put in a new trade every single day and so much more. Book your one-on-one coaching calls, group coaching calls. I dropped 2 microcap gems. Guys, we dropped Avantis, 3 days ago? 3 days ago, something like that. We're up like a crazy amount, like 366% or something on that, guys. Get over there, get in early on our microcap gems. You get all of our training courses for free as a Patreon member as well. The link is down below. It's in the chat. It's in the pinned comments. It's in the description. Click like if you like this video. Click subscribe if you really like it. I'll see you guys in the next one. God bless.